Hey guys, welcome to my video. It's Jelly Trades, and today we're going to be talking about short-term swings. Basically using those for like high probability liquidity, and I'm also going to be talking about the intermediate swing highs and swing lows. Let me just jump straight into it with elementary swing points, just normal swing highs and swing lows. So here, I'm not going to go into too much detail, but we have a swing low and then a swing high. We have a candle that's lower here. The high is lower. We have a higher high in the middle, and then we have a lower high in the right. And the same vice versa for the lows. It's a lower low right here. And then the lowest low, and then a higher low. So a higher low, lowest low, and a higher low. So we're going to be talking about using basically in conjunction to this pattern, we're going to be talking about using it to find short-term swing highs. So here's a short-term swing high. Notice that we have a high right here, also a high right here. We have a high, higher high, and a lower high. We also have a high, higher high, and lower high. I'm gonna stop talking about the highs and the lows and stuff like that, but those are the swing highs. So we have two highs here, and then we have a high right here. This creates a short-term swing high right here. Um, and this will be it's a high probability area, so you could see like reversals from and stuff like that. Also, it could give you an indication instead of just like let's say if you're using this to like determine the strength of the market, you see we have a high here, and then we have a lower high, then we have a higher high, and we have a lower one, now we have a higher one, and then it's kind of just like instead of using all of those, you could just use the three candles. So basically, it's you find a swing high to the left, just like this pattern. Swing high to the left, and then a higher one, and then a lower one. So here's swing high, and then the swing high. All right, so I'm gonna give you guys some examples real quickly. So here, let me put this on full page mode. Here we have a daily chart. As you could see, price is obviously bullish. This is just top-down analysis. So we have fair value gap here. I was looking for a trade into this fair value gap because we have some like relatively equal lows here, looking like for a trade into it, and then a reversal. So a 5 minute, this is the fair value gap. It's shaded red right here. I don't know if you guys can see it, but here we have a swing low, lower swing low, and then a swing low, and this becomes the sell side liquidity. You could also say this is accumulation. Basically price takes that to the tick, jumps up. We get a nice little reversal off of this fair value gap on the 5 minute. And there's the 1 minute trade off of that. We have a breaker. We bought right here and sold right here. Selling to the winning buyers, breakout traders. Yeah, so we'll go for our next one. So here we're just another example on basically just showing how the news targets these important swing low short-term lows. Basically you could see price, and price doesn't have any short-term lows. You could probably see one right here, here, and here, short-term low getting broken. That could also be an indication for a market reversing. Feel free to check on those details. And I'll definitely post a video on it if I find something that seems like it's working. But right now we're just focusing on liquidity. So it's short-term lows, short-term lows. So we have swing, swing, a swing, and then swing all the way up here actually. That still classifies as short-term low. Excuse me. Here we have a short-term low, swing, swing, swing. And then price comes, grabs those two short-term lows, and we might have a short-term low over here. Here we have another example, and this is actually just right after this liquidity sweep. We'll create a short-term low. We could say right here, we could say right here. Uh, it doesn't really matter. All we know is that this is the most previous one. So short-term low or a swing, swing, and then we create a swing right here. So that's a short-term low, sell side liquidity. We come grab it. You can look for your 1 minute entries once you grab this liquidity. And I just like that this is like a concrete, way you could find high probability setups. Like let's say you silver bullet times 10 to 11 or 2 to 3. You could find a high probability setup or liquidity point with these. And I would suggest not using the 1 minute unless you're gonna be trading like 15 second, I would suggest using like 5 minute, 15 minute for your intraday, and obviously higher time frame is obviously good. So this is actually a 1 hour short term high. So we have a high, a swing, another swing, short term high, accumulation to price come. You could see you could look for your 5 minute, 15 minute entries because it's a 1 hour. Um, obviously you could see is an imbalance here that hasn't really been filled all the way it came traded into it. So yeah, and here I have the last example, and then we're gonna talk about intermediate term highs. So here I have just a quick model that I've been working on. If I'm bullish on price, I want to look for sell stop. Basically, for price to come and take liquidity below 8:30 open. So 8:30 open, price went down, went up. Now we came down, and we have this swing low. The reason why this swing low is important is because of short-term low. So we have a swing, and a higher swing. So this is the lowest swing. This creates a short-term low right here. And we actually use the higher high or the short-term. We use the highest swing over here in the short-term low to determine where price can go. You can see 50% to, just I'm just trying to show you guys some ways you could use this short-term lows, short-term highs for liquidity hunts. Here's a 1 minute entry. We have multiple things. We have breaker right here. We have market structure shift. A lot of stuff, order block. Basically I got in early because I saw these order blocks, stuff like that. So I got in, boom. But yeah, you could have gotten here, could have gotten here, could have gotten another fill in here if you're late. Just a bunch of stuff, So yeah, I'm gonna quickly go into the intermediate term highs. This is just my 2022 journal, and I just want to show you this. So once you map out the short term highs, um, you should be able to see the intermediate term highs pretty easily because it's the same pattern as everything else. So here we have a swing, 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 and a swing over here too. You could classify that as whatever. Could use this, or you could use a more predominant swing over here. Whatever floats your boat. Um, ICT does, just a note, ICT does say to use the swings that have the most amount of damage or the most amount of movement. So like this one, wicked up nicely, came down. So I'd classify it as a swing. This one, obviously is the high, came down. And, ICT probably wouldn't use this swing, but he would use something like this. Here we have a swing over here, and then we have the highest swing. And then we have a swing here, or you could classify it using this swing too. And here we have another swing, and a swing over here. So you could see that price is obviously, short-term highs is to the left, intermediate term highs in the middle, short-term high is into the right, so it's the same pattern as the swings. So this is your intermediate term high. And just a little like clue, and 2022 episode 12 is where you can find all the information on where ICT um talks about this and mentorship. He brings up when intermediate term highs are broken, it's more significant market structure break. So that's a market structure break. I'll make a video on that later. He also has other hidden gems of that. So hope you guys enjoyed, and I hope this was beneficial. And if not, let me know why in the comments. And let me know if any, you guys got any tips for using this strategy in the markets. Yeah, so I'm gonna catch you guys. Have a good one.